and welcome everyone to Gold Asset of the Day, presented by myself, Phil Carr, at the Gold and Silver Club. So today we're going to cover the markets for the 23rd of April. So first of all, if we just reflect on what happened last week on gold, we discussed the potential to have a range-bound market, but if we were to break through key support at $1,280 per ounce, this is where we might then see a revisit back towards the next major support zones of 1,275 to 1,270 US dollars per ounce. That's actually what we saw towards the end of last week. We saw that dollar strength come back in on the Thursday, and we saw gold break all the way down to 4-month lows. What do you need to know as we go into this week? Well, at the moment, gold is trading just above $1,270. It's finding support between 1,270 up to 1,275 US dollars per ounce. The expectation is over the course of this week that we'll again see approximately about a 200-point range for gold. The question is whether we will find support here and springboard higher as we make a move back towards 1280, then 1290. The expectation also as we go into May is, from a seasonal point of view, that tends to put more pressure to the upside on the dollar, and many commodities do sell off. So our positioning at the moment is we're looking to potentially sell into rallies. We can take advantage of the move here higher from the 1270 zone up to 1280 and potentially 1290 if we move within a normal 200-point range. That's how we'll be looking to trade gold from the start of the week up until about the midpoint of the week. However, note again, we tend to get that dollar strength normally come into the markets on Thursday. So far in 2019, Thursdays we've seen a rally or upside on gold 87% of the time. That's worth noting. So we tend to see dollar rallies, dollar strength come back into the week later. So particularly on a Thursday. And we saw that again last week, quite a significant breakout to the upside. So any upside on gold, we're expecting that to follow through up until about midweek, and then with the potential to roll over towards the end of the week. And then from a seasonal point of view, often you start to see weakness into commodities as we go into May, strength on the dollar, and we'll be looking then to reposition with a view to sell into gold, breaking back down towards the next major levels of 1265, 1260. Now, another point to note at the moment with respect to gold and where we are within these zones right now. So we've been sitting around the 4-month lows here for gold, and we've been consolidating for about 4 days as well. Now, what is worth noting too is that hedge funds and money managers, they have overall started to switch their positioning. So whereas previously we were seeing hedge funds and money managers, they were net long, they've now switched to a net sell short position on gold. Again, the expectation is that rallies will likely now be sold into with gold. So with that, I would look out for the potential of a rotation back towards that 1279, potentially back towards the 1290 zone, the midpoint of the channels that we have right here. If we were to see that sort of price action, and then look for sellers to come back in. On the flip side of that, if we just consolidate, if we break through 1270, the next major levels below are 1265, then 1260, but within approximately a 200-point range. So normally gold, week to week, we're moving approximately 200 points, which is a $20 move. The other big announcement that you really want to have on your radar going into next week is going to be Wednesday's FOMC statements. That's going to be on Wednesday, or next Wednesday, the 1st of May. And you want to have that on the radar. That can be a major catalyst for some explosive moves on gold and a lot of the commodity currencies, silver, of course, crude oil. We often see some big moves as well, but it is really the precious metals that we will be most focused on. So gold, next Wednesday, the 1st of May, is going to be the FOMC statement. That's at 7 o'clock London time. That typically provides some excellent opportunities in the run-up to the FOMC statement and on the actual FOMC statement itself. So just in summary, our plan at the moment for this week, or our expectation on gold, is right now gold is trading around 4-month lows. It's been consolidating for about 4 days. The expectation is we'll move within approximately a 200-point range over the course of this week. If gold does lift and hold 1270, we'll look for a rotation back towards 1280, 1290, and then at that area we'll potentially look for sellers to come back in and then take the trade all the way back down again, with a view to take it into May, lower prices as we start to see potentially dollar strength. And we know, of course, hedge funds and money managers, they've now switched into a net sell short position. The caveat to that being that there will be potentially an explosive move next Wednesday on the FOMC statement. So you want to really position yourself correctly for that, and the move that you often see in the next 24 hours to 48 hours up until the Friday after the FOMC statement. And again, just bear in mind that dollar strength that we're seeing come into the market each Thursday at the moment. 87% of this year we've seen dollar strength come into the market on a Thursday. That will help you a lot with your trades. So with that, today that has been Gold Asset of the Day. I wish you a fantastic week and good trading.